Welcome in this video, Xcn coin trend broken. Which way is the direction? We will analyze it. Don't forget to subscribe and please watch to the end to understand. When carefully observed on the chart, it was clearly evident that a long-standing descending trend structure had been in effect in the past. This trend, as an indication of the prevailing selling pressure in the market, caused the price to retreat to lower levels with each new peak. However, with recent developments, this trend has started to lose its defining characteristics significantly, and eventually, a breakout to the upside has occurred. From a technical analysis standpoint, this is a highly positive and promising signal. The trend line had previously acted like a resistance level, capping price increases by exerting downward pressure. But now, with the price breaking above this descending trend line, it shows that buyers are gaining strength and are no longer accepting that downward pressure. A breakout above a descending trend line signals a major shift in market sentiment. This breakout can also be seen as strong evidence of a potential trend reversal or the end of the prevailing bearish momentum. Such technical breakouts are critically important for investors, as they often signal the beginning of a new upward trend. After the breakout, the price pulling back towards the former descending trend line is a very healthy structure known in technical analysis as a retest. This type of pullback typically indicates that the price is now testing the previously broken resistance level as new support. And if this support holds, another upward move is likely to follow. The current retest process could be laying a more solid and stable foundation for the next upward movement. Retest formations like this help reinforce investor confidence and often support patient investors in making entry decisions. When a price breaks a resistance level and then returns to successfully test it as support, it confirms the market's acceptance of that level as a new base. This is reassuring for both short-term and medium to long-term investors. Especially when supported by volume analysis, it's quite common to see strong rallies follow such retests. Looking at this technical setup from a broader perspective, the breakout of the descending trend line suggests that the period of market indecision may be coming to an end, and the early stages of a new bullish cycle could be starting. In the past, every time the price touched this trend line, it would retreat downward, but this time, it has broken above it, crossing an important psychological and technical barrier. Now, investors are turning their attention to higher targets, signaling a rise in buying appetite, a very positive indicator. The current price level is critical. The descending trend has been broken, and the retest is underway, offering a potential opportunity for investors. These types of retest phases are often considered the final correction before a renewed upward movement begins. During this time, market participants experience the confidence of leaving the downtrend behind while watching the formation of a healthier foundation for the next rally. Technically, when these structures play out successfully, the price usually tests previous highs and then forms new ones. Right now, the price is attempting to hold above the broken trend line, which sets a positive stage for continued upside. Especially if we see closes above this level, confidence in the trend reversal being permanent grows, which could accelerate the entry of new investors into the market. At the same time, this development provides a confirmation signal for technical traders, laying the groundwork for more long positions. The retest following the breakout is not only technically important but psychologically as well. This structure gives investors the message, yes, this level is now acting as support. But of course, we can't make decisions based on trend lines alone. So let's take a look at other metrics as well. Stay tuned. One of the most notable structural formations on the chart is the upward curving formation observed in the price's trajectory. This curve reflects the dynamic nature of an accelerating uptrend over time and provides strong signals that the price is generally progressing within an upward momentum. The curve bending upward in this way is significant, as it shows that buying interest remains strong at lower levels and that buyers step in during each pullback. This rising curve acts as a dynamic support line along which the price moves and is regarded as a technical indicator of a healthy upward market structure. Unlike traditional straight support lines, these sloped supports are more flexible, indicating that price is moving in a more natural and volume-driven range. The presence of the curve demonstrates that bullish sentiment has been gaining strength over time, while selling pressure has gradually weakened. Such parabolic or curved support lines are often among the foundational elements of a sustainable uptrend. At the current technical position, the price appears to be approaching this rising curve. This touch point is highly significant and should be monitored closely. Historically, each time the price touched this curve, it reacted with upward movements and triggered strong buying waves. These reactions have confirmed that the curve is perceived by the market as a solid support level. If the price approaches and holds at this curve, another strong upward reaction is highly likely. These structures are defined in technical analysis as dynamic support and typically serve as confirmations of trend continuity. The critical point is for the price to touch this curve and find stability there. This contact can be considered a zone where the market gathers strength and rebuilds momentum. If the curve is not broken downward, it will indicate that the uptrend remains healthy and stable. Should the price bounce back upward without breaking below this curve, it could technically signal the beginning of a new upward wave. This would be interpreted by investors and technical analysts as a reassuring sign that the market is still strongly supported on the buying side. These types of parabolic support curves are important not only technically but also in terms of investor psychology. The fact that the price finds support at increasingly higher levels during each pullback suggests that optimism remains prevalent in the market and that investors continue to hold bullish expectations. This curve acts almost like a visual representation of sustained buying interest over time. As long as the price continues to use this curve as support, investor confidence will likely increase, which will support positive price action. The current technical outlook shows that the rising curve is being used as a reference point by market participants, and trading decisions are being shaped accordingly. Looking at past price actions, it is evident that the price has consistently rebounded strongly after each contact with the curve. This indicates that the curve is not merely a visual element, but also a reflection of the market's collective subconscious. In technical analysis, prices that fall below such curves typically signal weakness, while prices that manage to stay above them generate strong continuation signals for the uptrend. It is extremely important that the price does not break below this curve. Such a breakdown would technically signal short-term weakness. However, based on the current outlook, this scenario appears quite unlikely. The market structure indicates that upward potential remains strong and that buyers are still actively engaged. For investors, this presents a highly encouraging view that supports continued confidence in the uptrend. Looking at the RSI indicator, we can see that the long-standing falling trend structure on the chart, which has been preventing price from gaining strength, has finally been broken to the upside. This breakout is critical for technical analysis because falling trend lines on the RSI often act as a ceiling that suppresses the market's momentum and limits the price's upward progress. However, when such suppressive structures are breached, there is a clear transformation in market psychology. This can significantly increase the potential for further price movement. Currently, this breakout in the RSI indicator makes it clear that the buy side is strengthening and selling pressure is weakening. An upside break of an RSI trend, especially one that has been under downward pressure for a long time, is technically considered a very positive signal in favor of the bulls. This indicates that the market is now open to upward pricing with a stronger momentum than before, and that there is serious potential for buying. For many traders, this breakout is a strong indicator that a positive change has begun. However, in technical analysis, not only the breakouts but also the retest phase that follows these breakouts are extremely important. As a matter of fact, it is seen in the RSI indicator that after this breakout, the retest process, which is a classic technical structure, comes into play. RSI trends are important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.